What's going on, everybody? Good morning and welcome back to Beat the Bell, presented by Kane Capital. Hope you guys are having an awesome start to the week. It is Monday and we are ready to go. We have a full week of trading and an important week of trading ahead. To talk about it, let's introduce our panel, starting with Money Mander. Money Mander, good morning.
Good morning. Ready to roll on this Monday. FOMC week on Wednesday, so we got a lot to cover in our Fed forecast coming up next.
All right, and Diamond Trades, good morning.
Alejandro, good morning. Ready to roll as well. Should be a great week. Let's get into it.
Awesome. Let's go straight into Fed forecast and economic calendar.
Yes, sir. So we can start with the economic calendar for this week. We've got building permits tomorrow and FOMC on Wednesday. Those are going to be the highest impact news of the week and cause probably the most volatility. We do have a few other data points coming in. NAHB Housing Market Index comes in today at 10 o'clock. Philly Fed Manufacturing on Thursday, as well as the weekly jobless claims. And then Friday, we'll wrap it up with a Fed speaker and the S&P composite PMI flash. So that's what we've got this week for the economic calendar. The earnings calendar this week is pretty light. Two notable ones to talk about will be GM, General Mills, not General Motors, GM on Wednesday, and FedEx as well on Wednesday after the close. So Wednesday's going to be a busy day with General Mills, FedEx, and the FOMC meetings coming all on Wednesday. Let's go ahead and jump into last week's trading. So last week was a mixed and volatile one in the markets. We left off Friday talking about how the strange move in bonds and the dollar relative to stocks would cause for concern, right? So let's go ahead and play that clip, Ryan. The dollar has also caught a bid amidst the news of a hotter than anticipated economy. The dollar and yields going up generally puts downward pressure on equities, which hasn't been the case over the past 2 days. So we'll have to see which reconciles first. As I'm speaking here, the indices are selling off here in the pre-market, so that may be the reconciliation that we were looking for. But I'm sure that we'll get further clarity next week with the FOMC meeting to come on Wednesday. So reconcile, they did, as the NSE sold off broadly on Friday, erasing the entire week of gains. The S&P fell 1.2%, with the NASDAQ losing 1.7%, and the Dow dropped 0.8% on Friday in a broad market rout. So shares of tech darlings in particular felt the heat, with shares of Meta, NVIDIA, and AMD all falling more than 3%. As we head into this week's FOMC meeting, the familiar names that have been carrying the market to strength for much of the year and much of the last 3 years, really, have begun to cool off. So at some point, fundamentals and valuation begin to matter in the stock market. And that point is precisely when there is an alternative investment option, namely the risk-free rate on government securities, which is influenced by the Fed's rate, obviously. So at the end, as the market has begun to accept the higher for longer narrative toward the end of Q2. Tech shares have been underperforming, and for a market that is heavily weighted towards tech stocks, as the size of their market caps have exploded over the last couple of years, this spells turbulent trading for the indices. So this week's FOMC meeting will be particularly important, the most important since the last one, as we like to say, as traders and investors alike look to glean insight from Fed Chair Jerome Powell about the future path of interest rates and what impact that will have on valuations in the short term. Mander, what do you got?
You got that spot on, and I'm going to take it right into what they are currently getting priced in for the Fed meeting going into Wednesday and beyond. So currently, Fed fund futures have a hold at 5.25 to 5.5, priced in at like a 99% interval. So I'm not even going to cover that. Obviously, the Fed has yet to deviate from the probable favorite going into these meetings. So I'm going to put my money on we probably get a hold here at 5.25 to 5.5. I think what's more important is what you said, and the press conference coming afterward is what's really going to matter. And not that I think he's going to give any, but the markets will definitely be looking to get any forward guidance help, possible out of Powell when they're looking to hike. Are we currently at the top? When can we see a cut? Et cetera, et cetera. That's really the big what if, and always has been going into and out of these meetings. So if we take a look here, what we have up on the screen, this is really the current repricing that we've seen going into the January of next year's meeting. And this is what sent those yields way higher, sent the dollar higher, and really put those headwinds that we've been seeing, one of the many headwinds we've been seeing coming into equities this September, which, as we said, really at the start of the month is historically one of the roughest months for stocks to begin with. Then you have this going on here. So just going back a month to August 18th, the likelihood for a 25 basis point hike and cut at January of next year's meeting were about the same. They're right around 20%-ish likelihood we're either 25 basis points higher or 25 basis points lower by the time and after the January 24 meeting. Today, if you look at it, the 25 basis points higher jumped to 35%, and the cut of 25 basis points dropped to a measly 2% here. So really, we're seeing this higher for longer narrative getting priced in the federal funds rate futures, but also across yields and pretty much everything on the longer duration of the yield curve and the stock market, obviously, as well. This is really where we're starting to see this paradigm shift here in sentiment. And really, if we go all the way out into the end of the year of 24, right now, the probable favorite is at 450 to 4.75, which if you look at the most recent June projections that we got from the Fed, and I think we get today, they do them quarterly, we'll get those Fed projections and where they've shifted. The Fed really pretty much said this. The Fed raised in the June meeting, they raised their end of year 23 projections by 50 basis points, and they raised their end of year next year by 30 basis points. And yet, even up until a month ago, you could see there was a 1 in 7% interval being priced in that we would end next year 1.5% lower, down at like 375 to 400. So the proof was kind of in the pudding here. The Fed raised their projections for the federal funds rate across the board for the end of this year and the end of next year. And yet the markets, that was at the start of the summer. And then obviously everyone knows what happened over the summer. We got the mega rally in stocks. Yields came way down. Everyone was risk on, risk on. And really, it turns out the Fed just stuck to the script the entire time. And really, they've stuck to the script since the very first cut and the projections they've given out to us. So that's really what I had to say. I think, anytime the markets get really frothy like that, it's important to go back and say, how is this contradicting to what the Fed has given us? Because anytime you see that big difference between what is being priced in federal funds rate futures and in the bond market versus what the Fed has said, the Fed has really been the one to stick to the script the whole time. And then you get these reconciliation moves, as Diamond was hitting at, back to pretty much what the Fed was putting in the pudding the whole time. So that's what I think is going to be important, is any forward guidance we get out of Powell, and if it contradicts with the last June projections they've given us and what the federal funds rate and bond market is currently pricing in.
I think as it relates to stocks as well, one thing that I'm going to be watching as we go forward here is like what happens to a lot of those high beta names that we saw catch a bid there towards like the end of Q2. Like if you look at some of the names, and again, it's not like, I think now we've gone far enough where it's like you can't really put all of the like high beta shit companies like in the same basket. I think that you have to do like a bit of looking a bit further, because I do think that some of them actually do have promise, like looking into the future in terms of like where their businesses could go. And then you have others that have sort of just still riding that wave from like 2021 where it's like this company is kind of dog shit, but it's still hanging around. I think I wonder what happens to a lot of the shares of those names, because like we talked about on Friday, some of those high beta names are up like 600-700% on the year. Like, is that something that as the market starts to accept, like you said, this higher flowing narrative, you're getting it priced into the longer term yields? What happens to your valuation models to those companies, right? Do the stock prices there come down considerably at any point in the near term future? I think that in terms of individual stocks, at least, that's where I'll be looking in the short term to see if there's any sort of fluctuations there. But that'll wrap it up for us here at Fed Forecast. Pass it back to Alejandro.
Awesome. Thank you, fellas. Let's take a look at the system. So September, as you guys know, and if you've been actively trading it, has been a volatile, choppy month in comparison to some of those months that we got during the summer, where we had some really nice trends. Now, last week on Thursday and Friday, we actually did get some beautiful price action to trade with the move higher on Thursday and the sharp sell on Friday. But if using the system to trade, certainly a fast moving market. And I want to talk about something to keep in mind. Okay. So we got the buy signal. We broke over the hourly 50 SMA on the Thursday. And as you guys saw, the market sold off sharply, about 60 points on Friday. And so anybody who was holding with high conviction, hoping for a breakout or an extended leg in continuation from what we got on Thursday, because we got the buy signal, certainly got themselves in trouble. And so this is just a reminder that there's a difference between trading and forecasting. And as traders, we have the ability to pivot whenever we see that we are wrong, whenever the market is changing and the volatility levels are high. And so even though you'd say you were using the system and we got the buy signal on the hourly chart, we're trading above the 50 SMA on the 30-minute and 1 hour, and you're long, as soon as you see the break below the 50 SMA, for example, that would be an awesome opportunity to simply exit your position. You can always re-enter, and it's okay for a position to go in your favor after you exit it, right? But keeping that capital preservation in mind is always number one. All right. So knowing that September is volatile, knowing that September is a bit of a choppier month, it is a weaker month, just have to keep that in mind, especially when trading longs, right? Size them appropriately, price that into your sizing. But September, at least for me, is all about survival and trading smart and capital preservation. It is not the month for me to try to do something special. Okay. And we've seen that so far. It has not been an easy month to trade. But coming into today, we are below the 50 SMA on both the 30-minute and 1 hour charts. So bears are clearly in control. We are selling here in the pre-market with the futures down just a bit. So something important to note there. But we will see how things finish up today. But again, bears back in control after that Friday session. Now we're going to do Bet the Bell, hosted by me, because Snipa is not here today. And we will start with the first classic question, which is green or red. And we'll go to Noah first for this one.
I don't love not having Snipes here. I think, Alejandro, I think while you do a great job, just the energy is just not quite there for whatever reason. I'm gonna go red today. Yeah, I'm gonna go red today.
I'm also going to take red today. Yields up, VIX up in the pre-market. And I think Friday just gave us a really technical breakdown that, I think it would be really good for bulls to get in control and send us green today. And maybe, you get the narrative of, was it just OPEX volatility, blah, 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 blah on Friday. But I think there was too much blood in the waters on Friday. I think we probably get a continued red day today.
I'm going to go red as well. All right. Second question here. Ryan, if you can put the tweet on the screen. 2,100 plus schools in the U.S. have switched to a 4-day week, up 50% in the past decade, per CNN. Would like to get your guys' thoughts on this. I'll weigh in at the end. We can start with Money Mander.
I mean, that's awesome. I wish my school was doing 4-day school weeks back in when we were going to high school. It's pretty much, I think, a lot of the companies are doing the same as well, right? You can either take like a Monday or a Friday off, you get the long weekend, and then you do a flex week and work 10 hours during the week to get your 40. I'd assume their school days are probably longer on the Monday through Thursday or whatever day they have actual school, and then they're getting one, a longer weekend with one of the days off. I think, if I were a student, I would be fine with it.
I'm sure you would be. Noah.
I like it. I think if you're going to do that though, I think that you've got to have something else like on that last day, like make it like a years long project, maybe that you have to like collaborate with, your classmates outside of school or something. I feel like it sets a bad precedent to just give them like the day off, like don't do anything. I think it would be like more beneficial to make it more of like a real world situation where it's like, you have this extra time, but like use it wisely. Don't just like spend it playing Xbox or something. Like actually be productive and stuff like that. So I don't hate it as long as, it's not being like completely wasted.
Yeah. So my thoughts on this, obviously this would have been ideal when we were in high school, middle school, etc. But I don't think that it is realistic. Noah just mentioned it. What happens when you start working a job or more importantly, when you go off to college and you really don't have that person telling you, hey, you have to go to class on Fridays. Hey, you have to do work on Fridays. Like I would see myself getting in a really comfy rhythm of never doing anything on a Friday. Not that we really ever did anything on Fridays anyways in college, but I don't think it's good to be teaching young people that they only have to work 4 days a week.
I think it probably puts the parents in a tough spot too, because if your kids aren't of age to be driving themselves around, like now you have to go likely find daycare and stuff for them on Friday.
Yeah.
If they're working.
Yeah, for the super young kids, you're right.
Alejandro is absolutely blessed that we don't have Friday footage of him from college because he'd be cooked. He'd be absolutely cooked. This argument would just be moot.
Yeah, I mean, Friday classes were a prank, but yeah, we still got our work done. That's only because we went to school 5 days a week in high school. If not,
there you go. There you go.
All right, let's move on to the final question now. So I want to ask you guys, if you were put in a situation where you were only given two options, over the next year, you had to trade a minimum of 10 times a week or trade a maximum of once per week, which would you favor and why? We can start with Noah.
I'm gonna take 10 trades, and I think
I wasn't expecting that.
No, yeah, me neither. But like when I thought about it, I was like, I would hate to have the one trade a week, and then because like anything could happen, right? Like you can miss execute, like you get like a stop hunt or something, like then you can't get back in the trade. Like, and the good thing about the 10 trades a week is like if I did take, especially like if I knew that this was the situation. Like if the rules were given to me before the game started.
No, you can't finesse it and like open and close a trade in like 2 seconds. Like if that's what you're gonna say.
That's kind of what I was gonna do.
What I was gonna say. It has to be like a genuine trade attempt.
Okay, you'd be a good prop firm CEO. That's what you would be a great.
I like both of these.
We'll go. I think I would still go with 10 though. I mean. Like I said, the one trade a week, like in theory, it sounds good, but like you can, especially like if you have a system with like a 50% hit rate or something, like you could take a trade on your one trade a week, have it be a loss through no fault of your own. It's just part of what happens, part of how your system works. And you got to wait till next week. Like, I don't know. I'm not a huge fan of that. I think I would go with 10 and just like size down on each one.
All right, Sal.
I'm going to do the exact same thing, and I'm not one to push like more is merrier. I think, if anything, like getting down to the lowest possible trades that you realistically can take with your system is the best way to do it. But like Noah said, if I have, a poor trade on the one trade I have for the whole week, and then God forbid you have great price action in the last 4 days and I'm done by a Monday, like that would be the worst thing ever. So I think, if you broke it down and you basically just had to take a morning session and an afternoon session trade, every day of the week, or you're limited to only one trade for the whole week, I think I'm going to take the 10.
So when I originally wrote the question, I thought that one trade per week would be the obvious answer because, well, maybe not for Mander because you do trade a little bit more than Noah and I do. Now, after hearing the explanations, it is a bit more difficult to justify the one trade per week because that does put you, that's a lot of pressure to make money on that trade. But it's still interesting and, we'll never really know, but what would the success rate look like? Yes, the pressure to do well on that one trade is high. If you lose that trade, that's going to be frustrating. If you decide to trade on a day with shitty price action and then the next day is a beautiful day, that's frustrating. But at the end of the year, like, what would your success look like? I
100%.
honestly
I think
still
I agree.
argue that the one trade per week, you might make more money. Even though mentally it's tough, I think you would make more money trading only once a week.
I don't know necessarily
Depending on how you
if you
trade.
would make more money. I do think that at the end of the year, if you printed out each setup that you took, the one with one trade per week, you would take higher quality setups, right? So
Yeah.
like, I mean, at the very least, you would be sort of filtering through some of the BS trades that I'm sure you would wind up taking if you were forced to trade 10 times a week. Like, the quality of the setups would definitely be higher without a doubt. So, I mean,
Definitely.
if that's your goal, then hey, I mean, I could see it. I could understand going that route. I could understand it.
You'd have to figure like you're planning all week for one setup. That's the only trade you have. But then at the same time, but now you're planning all week for one setup. If you don't get it, or like, God forbid, whatever happens, the pressure of only having one trade, I think like this would be an interesting study. And obviously I don't think either of us would ideally want to do either of these, but it would be interesting to see, like, knowing you have one trade to be perfect on the whole week, like how would your hit rate get affected?
I'm thinking, imagine like you're going through a draw. Like, imagine you just lose like 4 trades in a row, and you're just like,
there's my month.
That would be, and like you can't trade until the next week. Oh, that'd be terrible. All right, that's gonna do it, guys. For Beat the Bell today. Appreciate everybody who tuned in. Happy Monday. Hope you guys are ready to get after it. Trade smart, manage risk, do your thing. We'll be trading live all day in the King Capital Discord. You guys can go to king-capital.com. Scan the QR on the screen. Again, appreciate everybody who tuned in. We'll catch you guys back here on Wednesday morning at 8:30 a.m. Eastern time. Have a good one, everybody.